Subscribe, like, and share this video content. With the most recent market pullback for the last few days, hopefully you have constructed a portfolio that maintained a majority of its valuation. So what can you do during a correction that will benefit you in the long term? Anytime the stock market takes a turn for the worst, it can increase anxiety and stress associated with being invested. You can bet that seasoned investors as well as beginners are feeling the indecisions involved, like whether to sell or stay the course. The beginning of this recent week, the Nasdaq Composite is down approximately 11% as of January 21, 2022. The market is on track to be the worst start since 2008, when it fell almost 14% in the first 14 days according to Dow Jones market data. With the decline of the overall market hitting the 11% threshold, it has now satisfied the definition of a market correction. Consequently, the S&P 500 has dropped 11%, which is the fastest decline seen on record. That decline that we have witnessed in the past week can signal an enhanced emotional overreaction, especially from investing beginners. As tempting as it is to unload stocks when their value starts to decline, stick to the plan of buy and hold, and load up on quality stocks. You don't lose money in a correction until you actually sell off stocks at a lower price than what you acquired them for. If you stick to the plan to hold stocks for the long term, then you can mitigate losses by waiting for the market situation to turn around. It is better to look at market correction like a sale in a department store. This is the opportunity to acquire something of quality for a discounted price. There is still research to be done, like looking at the balance sheet and intrinsic value of potential companies of interest. For example, if a company was on the decline before the market correction, then some careful thought may be needed before the purchase of those shares. Here are some things to be aware of during a market correction that can have an influence on how you make decisions. It might lead to you making more of an emotional decision instead of a strategic one that can benefit your portfolio. It is a stressful time watching the market and seeing how your portfolio reacts. Try not to check it every minute, every hour of every day. Checking your portfolio every couple of days can help with avoiding the emotional stress that can influence rash decisions. It is normal to have some nervous moments during downturns. But remember, downturns are part of the cycle. Corrections have been common in the market since 1928, and the market has a very strong history of bouncing back after one has occurred. What investors do not want to miss out on is the market recovery, which always happens after a market correction. Market corrections enables investors in a way that they must choose quality stocks, which will benefit their portfolio in the long term. Thanks for watching. Subscribe, like, and share this video. And hit the notification bell to alert you for more videos.